Starbucks closing higher by more than 24% yesterday, the best day since its IPO after the announcement that Chipotle CEO Brian Niccol would be replacing its current CEO. We broke that news right here on Squawk, and yesterday, and it became the news of the day. It's now on the cover of the Wall Street Journal this morning. Jon Tower, Citi restaurant analyst, is here. John, it's a huge move in terms of the talent, but it does remain that a lot of the same challenges have not gone away overnight.
Yeah, there's a lot of heavy lifting ahead for Brian and team, including figuring out, obviously in the U.S., how are you going to get traffic back in the stores? How are you going to improve the customer experience? How are you going to improve the employee experience? You got the lingering China issue, which is effectively, what are you going to do with that market going forward? And then there's questions about cost savings, unit growth going forward. There's a lot to address here. So he's got a very full plate coming into this role.
So, okay, that's the plate. The question is, what do you think he's going to do? And can you walk and chew gum at the same time? Which is to say, is there something you can do in the immediate term to try to bring customers back? I don't know if that's value-oriented menus or other kinds of promotional things. I think part of the thing they want to stop doing, frankly, is the discounting, which has almost cheapened the brand that we've seen over the last year. At the same time, I'm imagining if you're him, given that the market loves you, you're going to throw the kitchen sink in with everything. I would also imagine you'd say, you know what, I'm going to do a huge capital expenditure on technology now. Maybe the next couple of quarters are going to be awful, frankly, because you love me so much. You'll see the fruits of my labor in 2 years. How does that all play itself out?
Yeah, I agree with you. Look, he's got effectively carte blanche to do what he needs to do from investors, right? Meaning, I think you'll see a pull forward on a massive CapEx spend, specifically around the Siren Station remodel, which is effectively supposed to help with throughput, the employee experience at the stores. And it's been rolling at a very slow pace across the U.S. That should help solve some of the profitability problems that they've had in the U.S. What's going to drive traffic back in? I don't know. I mean, they've thrown a lot against the wall when it came to innovation. Price points have gotten a little bit out of hand. And so, they're effectively telling you by all the promotional activity that they're doing right now, that doesn't seem to be working, but that's the route they've been going. Will you see more of that in the future, perhaps in a more creative means, meaning you'll see it more through the app, deals that way, perhaps more happy hours? I don't know, but they've got to go after that traffic to get it back in the stores, because competition's not going to let up anytime soon. And that's ultimately what investors are going to want to see, is traction on the traffic side. And if they're not getting that, then they're going to ultimately hold his feet to the fire, but they'd probably bought himself about 12 to 24 months before anything really needs to come to fruition.
What are the overlaps between Chipotle and Starbucks? Is it almost the same customer in terms of income demographic? In terms of complication of fulfilling an order? Is making a burrito or a bowl as complicated as making an iced drink? I mean, I was trying to figure out, what he'll bring to the table at Starbucks operationally that could, improve, for instance, the speed at which customers are served, which is a big complaint, and improve efficiency on that front.
Yeah, look, I think what he did at Chipotle, he added some new menu items, but his whole thing was based upon the idea of simplicity and how do you improve throughput across the board, across the company over time, using great, the stage gate process to inform his decision making. I think you'll see something very similar at Starbucks. So you might actually see in the next 12 to 24 months menu optimization where, today there's an extremely wide range of options for a customer when they walk in there, or even do the mobile order ahead for what they can put on their beverages and in their beverages. I think that might get streamlined. And if that's the case, it'll help improve the operations and the throughput at the stores over time. And that might, in the near term, cost them a little bit on the margin when it comes to top line sales growth. But, as long as it's ultimately translating into better profits and a better customer experience, I think, it's likely going to play out in his favor over time.
John, what's your sense of the China question, which is to say what to do about China at a time when it seems like there is a race to the bottom margin, pricing wise, and others from all of the other competitor sets? Do you play it out? Do you say this is a huge growth market? We got to stay. We've invested so much. Do you say I got to pull the ripcord?
I think they partner in that market, probably in the form of a JV, maybe potential spin. But I think local market operators will be better to run that business than what they've got in terms of the structure today. I mean, you can look at parallels between Yum and Yum China and what happened there. And obviously, it's still a very difficult market from a competitive standpoint and from a macro standpoint. But I think you get boots on the ground, local operators who really understand not only the way the local market works, but also the politics behind, getting things going in different markets. And you're probably going to see a more profitable enterprise in that market over time with local market operators. So that's probably the direction they end up going.
And then lastly, you talked about the CapEx spending. I've talked about the CapEx spending on technology. What do you think that ultimately looks like? And what do you think the store experience becomes long term?
Yeah, I mean, if we're talking long term, I think
just play it out 2 years from now. 2 years from now, if he's going to come in there, he's going to spend some real money to upgrade the stores, to upgrade the technology in the stores. What does that look like to you?
It's Siren Craft or Siren Station. So you're going to see a remodeled cold beverage and hot beverage make station for the employees. You're going to see the warming walls put in place such that instead of taking every single individual order when a breakfast sandwich is asked for by the consumer, it's going to be heated in advance, kept on a wall, and pulled off and given to the customer. The drinks are going to be put through the system in a much faster manner. So it won't look too different to the customer than what you see today, but the experience will be faster for the customer. It'll be more ergonomically friendly for the employee, which all around will improve, I think, the experience for everybody involved. And, price points are a different question, but I think overall the environment shouldn't change too much for the customer.
John, we got to run, but I should also ask Chipotle, what do you think? Do you have a view?
I think it's a great opportunity to buy the name. I think he built a phenomenal business with a great team around him. And the idea that it's selling off, I mean, he obviously did phenomenal things for the company, but he built an awesome bench. And I think they're going to continue to run the script that he's put in place over the next several years. And so I think the sell-off year is overdone.